All right, ladies and gentlemen, welcome back. It is Monday, August 28th. We are in the middle of the dog days of summer, almost there. Not much to talk about other than, let's get right into the market outlook. So gonna share my screen here. So I got up on my screen the S&P, the SPY. We got the breakout from April, May, June here. This is the huge resistance now, maybe support level in the future. And then I've got eyes on the 8 and 21 day averages. Let's get everything else out of here besides the 50-day and the 21-day. So we can see on the way up, the SPY was being supported by the 20-day, 21-day moving average. Okay. And then we saw a significant change in trend right here. When this area broke to the downside, now this 21-day becomes resistance. Okay. We see it here. Push down. We see something change. We try to push up right here. It's the first time it failed the level. That began the sell-off. That's how we knew something changed. We got a low volume bounce last week into the level, coincided with those NVIDIA earnings, NVIDIA gapping up right into that resistance area, and boom, hard push down off that area. So now we got a relief bounce Friday, and that bounce somewhat continued today as we're up, but this area, this 50-day and 21-day moving average, that's the resistance. That's a huge resistance. And now at this point, everyone's got their eyes on a very clear either head and shoulders or failed head and shoulders. So we're going to get a big move and huge information out of the market here very soon. So we got the left shoulder here. We got, the head forming here. And now slowly it looks like this right shoulder is forming. So it would make sense. It would make some great sense for us to come down, break this neckline, and then come down and retest this area, this 420, and then this be the market bottom. And we hit that bottom, let's say mid-September or late September, and then that begins the end of year rally. So that's kind of my view on things. We'll see how things matriculate. The one thing I do want to point out, now we know that this area right here, the highs of Thursday's sell-off, huge resistance. So once that's broken to the upside, we could see a pretty feisty move back higher. I don't think we'll see it yet after the selling we saw Thursday, but with a lot of eyes on this head and shoulder pattern, it makes you think it won't work type thing. But a failed head and shoulders is a very bullish pattern. So you got to keep all possibilities in your head right now. I actually didn't even check on rates today. How we doing? Rates went sideways. Very quiet day. Today was just indicative of the dog days of summer. We still have rates traded around highs. It's as simple as we see this area break to the upside. We see a breakout. Very bad for stocks. We see this area become a high, and we kind of sell down to the lower area of this channel. That would be very bullish for stocks. So keeping things simple. Didn't seem like there was too much to be done today. But what are you thinking over there, Ben?
So I think the one sector really we've been talking about lately has just been energy. Again, everything talked about the S&P. I'm with you on that. But I think this energy sector in general has just been so much strong lately compared to most of its peers. I know some of them are looking at, COP and Exxon for some setups. So just focusing on the energy sector. The nice little flag that's been forming. Again, you have this much bigger macro breakout through this, all-time high area, this 130. It's been setting up for, more than, year and a half now. So definitely just keeping an eye on some of the energy names. Again, the rest of the sector is kind of a mixed bag with all of them kind of following suit with, kind of that head and shoulders pattern with the SPY. A lot of them just kind of pulling into major support. And, this is the time where either support is held and we push back up into resistance, or we kind of H back over, break down through support and see, lower prices. So like you mentioned, dog days of summer, not doing much. Only thing I've done trading wise today was I got into this HSIC up through this 7750 area. Again, very similar to what we were talking about before, which is kind of like the market in this range. And if it can push up higher. We want to be involved. If not, we kind of set silence for a bit. This HSIC, we saw this tight little consolidation here near an area of resistance that it has broken out in the past. You can see, broke out to this area, back in, was this end of June, a nice little breakout. So, sneaking back in this time with a stop for 76 for now. A few other names keeping on the radar in this VRSK. This is a blue sky breakout. Tech name, even though with tech names being a little bit weak lately, this VRSK has been somewhat strong. Did not get in today. This is technically the third attempt, still very tight risk, but if this can kind of pull back in this week and get another little push through on some higher volume, just didn't have the volume today. Traded 500,000 shares when on Friday alone traded nearly 1 million, so it's a low volume day. But keeping on this VRSK, what else? This UFPI, blue sky breakout through this 104 level, just flagging out here. Like to see it consolidate a little bit more. If this is going to go tomorrow, wouldn't really be too enthused buying, third day up, but consolidate a little bit longer, looks pretty good. And then lastly, this wing, again, this could be, either a textbook short down through 160 or a sport buyback up through 170. So it's really, dictating, what the market's going to do. Those are a couple names just keeping on the radar for the week ahead. And the other one, actually, Alex Smith called this one out this morning. It's AVT. This has been setting up for probably one of the biggest blue sky breakouts I've seen in a while. Last time this price point has really been hit was back in 2016. So, been setting up for quite some time now through this 50-51 area. So keeping a close eye on this one. And also this MasterCard pushing through all-time highs. So another one to kind of keep on the radar. For anyone who got into it today, looks great. Just a few on the radar. Also COP. We talked about energy names being strong. There's 118, 119 level, just nice flag here. You do have some overhead resistance, so maybe this gets a move to like 125 in the short term, but again, it's keeping a focus on relative strength, which lately definitely has been some of the energy names. So a couple names on the radar. Shake, if there's anything you want to go over. Definitely.
Yeah, for sure. Let me share that screen. Wingy just posted up. That looks sick for a short if they can fucking fail that area.
Yeah.
I didn't catch that one. That looks nice. So Monday morning gap up kind of sucks. We had that gap up this morning. I was loving this Carvana, and it gave such a difficult entry because of the gap up, so I let it go. A little upset about it. Went really, really nicely. I have 10%. This Tesla was the trade of the week, and again, Monday morning gap ups. Not a big fan. Actually, hate them. But here's what I'm looking at. This Tesla is interesting. So it started to run here late April. It was down 152. Makes a run right to 300 over the next course of the next few months. Begins a huge sell-off, and it pretty much stopped at exactly 50% retracement. Then it began a little momentum flag. So, I wanted this to give us a better entry. Hopefully it does nothing the next couple of days, gets really tight, and then gives us another entry. But the action we saw today, probably not going to take that trade. But we are seeing strength in electric vehicles. This XPeng, I wanted this one last week, missed it. Wasn't ready to buy it Friday, and it's taken off. But I'm watching this Li Auto. Here's another name. Huge run, May all the way into August. Beginning that pullback here. Now beginning some tight consolidation. I'm watching that 40-25 area for potential entry on the way up. Mark posted this AROC. Thinner name, but beautiful chart through this 1280. This name just corrected sideways for weeks, just no pullback because buyers were so strong. So through that 1280 in time, that one looks good. This GKOS, just wedging really nicely within a major uptrend. If we can get through the 75 area, that looks really good to the upside. This Rhythm, I just want this one to get tighter. We see this huge move and it's trying to consolidate, and now kind of went for that breakout today. But in this market environment, you definitely want to be a lot more picky with your setups. So didn't even really touch it. Waiting for these moving averages to catch up. Would love for it to consolidate and get really tight, and eventually give us that entry through 27. Gonna keep an eye on that one. Caterpillar. I traded some as Caterpillar today. I got out break even, but a lot of relative strength. Turning this previous resistance area here up at 268-ish into new support. Looks like it wants to bounce, just kind of a dead market right now, so not much action. And then there's Adobe. So I mean, if we are seeing the top of these AI names, or if they're starting to come in or whatever, there's a lot of these names with a huge air pocket underneath. And what I mean by air pocket, it's like, below this 500, where do you put your stop type thing? And it looks like, this could, if it breaks that 500 to the downside, it's got room all the way to this previous resistance area at 440 to me. And it's slowly beginning to form a head and shoulders. We got the left shoulder there, head there, and right shoulder not formed yet, but so if just keeping an eye on this one. Don't really want to buy it to the long side. Doesn't look like there's a lot. It's got, it looks kind of tired to me. And if it does want to, weaken up and break this to the downside, I got all eyes on this 50-day moving average right here. And I'll look to get short through that support area, depending how it sets up. Again, no rush because it hasn't shown that it wants to be a short yet. It just looks very toppy. It looks like it's getting weak and, kind of on its last push higher before, reversion to the mean here. So keeping that one on the radar. And then another name I like long is the Splunk SPLK, breaking this huge base on an earnings beat. We just wanted it to pull back and let these moving averages catch up. So it comes back down. There's 110, 112 area. You let these moving averages catch up, go sideways a little bit. That could be a good one soon. But again, right now, it seems like less is more, that's really well I got. I'm doing more just, fielding names rather than, trading my ass off. So just gathering names and potential setups for the future. I think we'll deal with a lot of chop these next few weeks, but that's really it. Anything else you want to touch on?
So the only thing, again, book of the month this month is The Intelligent Investor. We kind of got away from the books for a while, the books of the week, but this was probably the most intimidating book. If you look at it, this thing is 600 pages. So it's definitely not the easiest read, but I read through it. I'm halfway through it this month, and there's definitely some good chapters. Some of it's a little dated. This book's 50 years old, but still has some pretty classic, more fundamental analysis type of topics. But really reiterates the benefits of dollar cost averaging and a lot of things that we kind of talk about related to our long-term investing. So again, classic book. If you want to keep yourself a little more busy when the market's been sold these next couple of weeks, this will definitely keep you occupied.
All right. Seems like that's all we got for today, folks. You got any questions for us, like, subscribe, all that stuff. And that's all we got. Catch you guys next week.